Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the messy world of corporate filings and sometimes find a few skeletons in the closet. Today we're diving deep into the Q3 2025 financial report for TXNM Energy Incorporated and its subsidiaries Public Service Company of New Mexico and Texas. New Mexico Power Company, get ready for some serious numbers and a look at a really big deal that could change everything for these companies. Alright, buckle up folks, because TXNM Energy Inc. and its subsidiaries Public Service Company of New Mexico and Texas, New Mexico Power Company have just dropped their latest financial report and it is packed with information. We are looking at their earnings for the 9 months ended the 30th of September 2025 compared to the same period in 2024. Let's cut to the chase. The top line net earnings show a significant drop. For the 9 months ended the 30th of September 2025, TXNM's net earnings attributable to the company were $161.2 million. That is a pretty big dip from $226.4 million in the same period in 2024. That is a decrease of over $65 million. What does that mean for shareholders and the company's performance? Well, earnings per S-share also went down quite a bit from $2.50 in 2024 to $1.63 in 2025 per diluted share. This tells us that while the company is still profitable, it is facing some headwinds. Now, what is causing this drop? Part of the story is reflected in the number of shares. The average diluted common shares outstanding jumped from 90.6 million in 2024 to 99 million in 2025. More shares mean that the pie is being divided into smaller pieces for each shareholder. This increase in shares likely comes from stock issuances. We'll look at later. Let's break down where the money is coming from. For TXNM, consolidated electric operating revenues saw an increase. In the 9 months ended the 30th of September 2025, revenues reached $1.63 billion, up from $1.49 billion in 2024. That is about a 9% increase. This is good news, showing they are bringing in more money from their core business. However, the cost of getting that energy to customers also increased significantly. Cost of energy alone went up from $425.9 million in 2024 to $531.8 million in 2025. That is an increase of over $100 million, or about a 25% jump. This is a major factor eating into profits. The company is spending a lot more to secure the energy it sells. Another big expense is depreciation and amortization, which increased from $285 million in 2024 to $361.1 million in 2025. This suggests substantial investments in new infrastructure or assets that are being expensed over time. Now let's look at cash flow for the 9 months ended the 30th of September 2025. TXNM's cash flow from operating activities was $426.8 million. That is a nice increase from $349.5 million in 2024. This is a positive sign, showing the core business is generating more cash. However, the company is investing heavily in its future. Cash flows used in investing activities were $890.5 million in 2025, down from $805.9 million in 2024. This increase in outflow indicates significant spending on utility plant additions. They are pouring money into building and upgrading their facilities. Looking at the balance sheet, TXNM common stockholders' equity had a substantial increase from $2.58 billion at the end of 2024 to $3.46 billion by the 30th of September 2025. This growth is largely thanks to significant issuances of common stock in 2025. Digging into the financing section, we see a massive issuance of common stock in 2025. It brought in $842.9 million compared to $0 in 2024. This is a big play to raise capital, likely to fund those massive investments we saw earlier and perhaps to manage the upcoming merger. Now let's zoom in on Public Service Company of New Mexico, or PNM. For the 9 months ended the 30th of September 2025, PNM's net earnings were $141.6 million, a noticeable drop from $193.7 million in 2024. This is a significant decrease of over $50 million. Their operating income also fell from $243.1 million to $203.4 million. Similar to the consolidated picture, PNM's cost of energy shot up from $313.7 million to $408.1 million for the 9-month period. That is an increase of almost $100 million, or about 30%. And what about Texas, New Mexico Power Company, or TNMP? TNMP actually showed growth in net earnings, rising from $80.2 million in 2024 to $84.4 million in 2025. That is a modest but positive increase of about $4.2 million. Their utility margin also increased nicely from $333.7 million to $373.2 million. That is good to see TNMP is performing relatively well in increasing its core profitability. But the biggest story in this entire filing is the proposed merger. On May 18, 2025, TXNM Energy Inc. signed an agreement and plan of merger with Troy Parenco LLC and Troy Merger Sub Incorporated. This is a big deal because a company affiliated with Blackstone Infrastructure Partners LP is acquiring TXNM. The deal is structured as a cash-out merger where each share of TXNM common stock will be converted into the right to receive $61.25 in cash. This is a significant premium compared to recent stock prices, and it is a huge win for TXNM shareholders if it goes through. However, this deal isn't a done deal yet. There are a lot of hurdles to clear. They need regulatory approvals from the NMPRC PUCT-FERC and even the NRC and the HSR. There is also a risk that TXNM might have to pay a hefty termination fee of $210 million to Blackstone if the deal falls apart under certain circumstances. That is a significant amount of money to consider. Looking at the cash flow statement for TXNM, the financing activities show a massive inflow of $481.6 million in 2025 compared to $468.8 million in 2024. This inflow is driven by a mix of increased long-term borrowings and significant equity issuances, which we already touched upon. They are actively raising capital, which makes sense with a merger on the horizon and substantial investment needs. And that equity issuance is clearly visible here in the equity section of the balance sheet. TXNM common stock equity jumped from $2.58 billion at the end of 2024 to $3.46 billion by the 30th of September 2025, largely due to those equity transactions. Back to PNM, their 2025 rate request filed in June 2024 shows they are seeking a significant increase in retail electric rates. They are asking for a $174.3 million increase in retail revenues. This is driven by needed investments in infrastructure, increases in operating expenses and costs tied to energy storage agreements, among other things. This is a key part of their strategy to recover investments and earn their authorized returns. TNMP in Texas is also seeing significant rate adjustments. Their transmission cost of service rate increases and distribution rate increases add up to significant annual revenue increases, showing a focus on recovering infrastructure investments through regulatory mechanisms. For instance, the March 2025 transmission rate increase would boost annual revenue by $11.5 million. Now let's talk about the big picture and my take on all of this. TXNM is clearly navigating a period of significant transition. The proposed merger with Blackstone Infrastructure is the headline act. If it closes, it will fundamentally reshape TXNM, providing a massive cash infusion for shareholders, but also potentially changing the company's direction under new ownership. The substantial increase in equity issuance in 2025 is a clear signal they are raising significant capital. This is likely to fund ongoing investments in grid modernization and renewable energy projects which are crucial for meeting regulatory requirements, like New Mexico's Renewable Energy Act and the Energy Transition Act. TXNM's stated financial objective to deliver at or above industry. Average long-term earnings growth with a dividend payout ratio between 50 and 60% of ongoing earnings is ambitious, especially given the current earnings dip and the heavy investment in infrastructure. The fact that they are guiding for a dividend payout of 0.4075 per S-share in 2025 shows a commitment to returning value to shareholders, even with the merger pending. However, the sustainability of this dividend will hinge on the successful integration post-merger. A key risk for TXNM is the uncertainty surrounding the merger's completion. Regulatory approvals are a major hurdle, and any delays or imposed conditions could significantly impact the deal's value or even scuttle it entirely, leading to that hefty termination fee. The significant increase in investment in utility plant across PNM and TNMP is a strength, showing a commitment to modernizing and expanding their networks, but it also comes with significant financial demands and regulatory oversight. For PNM, the aggressive push towards a carbon-free generating portfolio by 2040 is a notable strategic direction. Their IRPs and resource applications highlight a clear plan to transition away from fossil fuels. However, the financial implications of these transitions, especially with evolving EPA regulations, and the potential costs of climate change-related litigation remain significant unknowns. TNMP seems to be benefiting from a more favorable regulatory environment in Texas with mechanisms that facilitate quicker recovery of infrastructure investments. The company's performance showing growth in earnings and utility margin is a positive sign despite the wider TXNM group facing profit challenges. Looking at the financials broadly, TXNM is in a high investment phase. The drop in earnings is concerning, but not entirely unexpected given the massive capital expenditures and the strategic maneuvers around the merger. The key will be the successful execution of both the merger and the ongoing infrastructure upgrades. If they can manage these challenges effectively, they could emerge stronger. If not, the path ahead could get bumpy. Alright, that is our deep dive into TXNM Energy and its subsidiaries' Q3 2025 report. What are your thoughts on this pending merger and the company's financial health? Are you excited about the potential acquisition or worried about the risks involved? Let me know your thoughts down in the comments below. If you found this breakdown helpful, please hit that like button, it really helps the channel. And of course, subscribe for more straight talk on corporate filings, and don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching, and I'll see you in the next one.